Hey, what's up, everybody? Welcome to episode number 138 here on season 1. And today we are talking about my worst investment on Stash. Yeah, honestly, today I feel really good about this episode. Not that it's like my worst trade and talking about the negative aspect of it, but just because I can be transparent with you guys about exactly what kind of trades I made and my shortcomings as an investor. Obviously, not every investment for me is going to have a positive return. I would like it to be like that, but unfortunately, the market does have dips and does have recessions and does have bear markets and bull markets and all that kind of stuff. So there is money that is left on the table across the board, and so this is my pitfall on Stash. So maybe you guys can learn from it and not make the same mistake, but I don't feel like it was actually too bad of a mistake for me. So anyways, let's go ahead and just dive into it. So first, I just wanted to mention the two honorable mentions. The first honorable mention is going to be Combat Carbon. And so far on that ETF, I've had a 0.13% return, which is not too much, obviously, but I've only been in that ETF for about 3 weeks or something. So I guess it's not really like an honorable mention. It's just one of my stocks that has the lowest return. And that basically means 0.13% means that I'm up 3 cents on $20. Not too bad in a month. I'll take it. I think that probably going into next summer, we'll probably see it spike up. It all depends on what kind of laws are passed and if we're going to continue to support companies that are trying to go green or support companies that are pushing that. Anyways, my second honorable mention, which is, I guess, number 2, second place, gave me a negative 1.11% return, which basically means that I was down 12 cents out of $20. And this investment, or this ETF, is going to be called Uncle Sam. It's a treasury ETF, means you're buying bonds from the government. I don't put all my money, like I don't hold a large amount into Uncle Sam as far as like bonds security. I put more of my money into Park My Cash because I feel like that portfolio, Park My Cash, is more diversified. There's corporate bonds and government bonds on there, and so I try to stay away from the Uncle Sam because I don't want to just be solely relying on treasury bonds. But the absolute worst, and I mean the worst, this is as low as you get, zero, zilch, nada. This is the worst investment I've had on Stash, is down 5.67%. So over, I think it's like $40 probably, I'm down $2.27. This stock, or this ETF, is called All That Glitters. It is a gold, silver, and precious metal holding stock ETF. And so when I originally, my 2 investments into this ETF were both in August of 2016, which would have been last year, 2 months ago. Not 2 months ago, but a year and 2 months ago, which was at the tail end of the gold and silver spike, which happened. The Brexit happened, boom, gold and silver spike enormously. Next thing you know, people are buying, and towards the tail end was when I was like, oh, you know what, I don't think it's going to go down that much more, and so I bought some in. I think at one point I was down like 15% on that. It's nice though that I've definitely came back up quite a bit, and now I'm only sitting down like almost 6%. However, a few months ago on that account I did break even, and for some reason because I'm such a long-term holder on that specific stock, or in all my stocks, didn't even cross my mind to sell. It was like, okay, like that's great, like hopefully it continues to go up, but for right now, like I'm happy that we broke even again. But unfortunately, it did drop back down. But I'm looking at it from the long-term perspective, and once I get a lot of my, once I'm invested into every single ETF on Stash, then I'm going to go and turn that stock, that ETF, up to 10 to 15%. And hopefully what that'll do is average my cost and bring it down just enough that either I break even or that I set myself up to break even and earn profit in the next 3 to 6 months. So anyways, that's the worst stock. It's called All That Glitters. I can't make a recommendation whether I would buy it right now or not. I think that right now would actually probably be, it would definitely be a better time to buy it right now than it would have been to buy a year ago. So anyways, let's go ahead and dive into the question of the day, and that is, should I buy a microphone and start recording my own music? This is actually a very funny question because last night I went to a bar, saloon, I think it's called a saloon, with a few of my friends for one of our friends' birthday parties, and one of the guys that I was talking to, that was one of her friends, was talking about making music, and I was like, the best time to start is now. And should you buy a microphone and start recording your music? I think that most people think about buying like something that's brand new. I would try to look on Craigslist or OfferUp or something like that to try to find something that's cheaper, more affordable, so you're not like super invested into something that might actually not work. But I don't see why it's a bad idea. Like, if it's something you love, like, attack it, and attack it fully until you either fall out of love with it, or you're like, this is not what I wanted to do. This is not what I thought it was going to be. So yes, the quick answer is just yes. Anyways, if you guys have any questions regarding Stash, Acorns, or Robinhood, as well as general investing advice, business, Etsy, or coaching, feel free to post those questions down below. That was so weird what I just showed my fingers. And until next time, don't forget to subscribe up here and check out my worst trade on Robinhood. And then check out this other video right here. And as always, thank you for watching. I really appreciate it.